Hello, and welcome to the ConsistentOptionsIncome.com Pairs Trading Course, Lesson 6, Managing Pairs Trade Risk. Let's get started. Okay, pairs trading is fairly low risk to begin with because we're almost perfectly hedged, one thing long and one thing short. So for our risk management, we primarily need to just take as many trades as we can and let the numbers play out. We have to accept our winners and our losers. However, we're going to have mostly winners because it's a fairly high probability trade. Here are some numbers from a great deal of backtesting that I've done. So on a daily basis, the number of winning days we'll have over this given period was 1,198 out of 1,961. So about 61% of our days where we're trading multiple pairs should be winners. In terms of weeks, 298 out of 416 weeks should be profitable, and you can see our percentage increasing there. So 72% of our weeks should be winners. And for months, 74 out of 95 months should be winners, so that's 78% of the months. So you can see that even on a daily basis, even though it may be 61% winners, as time plays out over the weeks and months, we start getting a little bit better percentage in terms of our winning trades. That's because this is a very high probability trade, and the more trades we do, the better the numbers are going to play out. So that's one of the takeaways here, is that we want a large number of occurrences because this is what helps the probabilities play out. In other words, if I was just doing a pairs trade, like let's say once every other week, right, the chances of me having 78% winning months isn't that great. So pairs trading is pretty low risk, so we want to try to do as many occurrences as we can so that we can achieve the probabilities that we're expecting. Also, we should trade each occurrence small to avoid one large damaging risk. In other words, no matter how good a job we do at curating our pairs, we have stock-specific risks. This is risk that's hard to control. Now sometimes this happens in our favor. We just happen to be short, let's say a stock that has some big event, and we are able to benefit from it. But obviously that's a 50-50 thing. At 50% of the time that's going to go against us. So this is risk that's hard to control, and one of the ways we can try to limit that is to keep each pair that we trade as small as we can in size, and then just if we want more exposure to the market, we just trade more pairs. Okay, this stock-specific risk is one of the reasons that we check the news on a daily basis and we have a hedge. In other words, we're selling one thing long and selling one thing short. Also, one of the other things we can do is try not to trade one stock more than once in your portfolio. In other words, if you've got 20 pairs on, you don't want the same stock in each of those 20 pairs. In other words, if that one stock has some big stock-specific event, then all 20 pairs are now in jeopardy. So we don't want one stock overrepresented in our portfolio. It's also a good idea to paper trade it first to get good at the administration, so we don't end up taking some losses or taking on more risk than we need to simply because we haven't gotten good at the execution of our pairs trading. Scaling up and money management. So when we talk about money management, we're talking about how many shares do we trade at one time. Now we always have short shares and long shares, but the price of the stocks that we're trading are often very different. So how many shares do we decide to trade short, and how many shares do we decide to trade long? The way that works best, that I found over time, is equal dollar amounts. In other words, in our alerting service, we assume $10,000 per symbol. So if we've got a pair, we would divide the price of those stocks into $10,000 to come up with the number of shares that we want to trade on each of those stocks. So equal dollar amounts on each of the two stocks in our pair tends to be the best method that I've found. Now if you research pairs trading on the internet, you may find a lot of references to volatility or beta normalized sizing. In other words, the idea here is that, hey, one stock is more volatile than the other, so I don't need to trade as many shares of that, right? The more sedate stock doesn't move around as much, so I can trade more shares of that, and the one that's volatile, I only need to trade less shares. Problem comes when you try to decide how to determine the volatility of the two different stocks. In my own backtesting, using a bunch of different methods, this particular volatility-based sizing never worked out quite as well as the equal dollar amounts. So it's not something that I try to do. Also, you can incorporate position sizing in your pairs trading. This lets your profit dictate when to increase your size. So as you start pairs trading, start small, and as you start building profits, you can start increasing the size of your pairs. In other words, the dollar amounts that you'll trade on each side of a pair. Also, another way to scale up is to use portfolio margin. Usually you need to have an account with over $125,000 in it to get portfolio margin. However, what portfolio margin does for you, it allows you to trade to 6 times or over your account value. The reason this is attractive for pairs trading is because pairs trading is pretty low risk, and we don't mind using leverage to increase the amount of exposure that we have to the market, because we're pretty much equally hedged on each side of our trade. Our account should be pretty much half longs and half shorts, so it's fairly low risk to begin with, so there's less danger in using leverage to enhance our returns. In other words, we may be pulling in small returns on our pairs trade, but if we can do those small returns times 6, all of a sudden each of those pair trades becomes more valuable to us. So using these risk management and money management techniques can really help you in your pairs trading. If you have any questions about the content in this video, you can contact me at john@consistentoptionsincome.com or check the website for more information at consistentoptionsincome.com. Alright, coming up next, Lesson 7, Introducing our Pairs Trading Service.